Hey guys, how's it going? So today guys, we're going to be talking about the one and only Opendoor stock. The company has experienced a very large increase in price recently. It's gone from the low of 40 cents only about 1 to 2 weeks ago, and now last time I checked is $1.62. That's also my purchase price, by the way. So I just got in. Spoiler, anyway. But there's a lot to really talk about when it comes to Opendoor. Obviously, Opendoor is that iBuyer program. It's one of those companies where they kind of buy and sell homes through their virtual platform, guys. It's kind of like Redfin, where it not only is a great place to buy and sell stuff, for at least for the company, but they also provide you with a repository of information about the housing market in your area or whatever prospective market you're looking at. So it's really a double-edged sword there. But the stock has definitely been battered down. You know, it came out in 2021 during the SPAC era, you know, $30 to $40 at its peak, and now it's all the way down to $1.62. It was 40 cents last week, guys. So it certainly had a large drop, and for good reason, guys. Because of the really high interest rates, mortgage rates have been about 7 to 8%, and as a result, mortgage buying and house purchasing has collapsed. They collapsed in 2022, 23, and then 24 is a subtle rebound, but still it's pretty bad. But 25 has seen a subtle increase as well. So it seems like we're on the right track, but it's certainly something to keep in mind, that the market is still not the best, but with Trump about to fire Jerome Powell leaving on his own accord, whichever story you want to believe, I do anticipate that this market will begin to open up. And by the time that the interest rates start to come down, as Trump will put somebody else in the Fed chair role, somebody who is definitely more bullish, and dovish is the word you're thinking of in the marketplace. So as Trump puts that next guy in office, you can expect that those interest rates are going to drop very quickly. So it's definitely something to keep in mind. So keep that in mind, guys. You want to get in before the trend starts. So they're projected to be losing money in 2025 and 2026, but then EBITDA positive in 2027. Although, that's the current market conditions. With improving market conditions, I think you can expect to see profitability, at least on the EBITDA level, in 2026, which is good. Revenue is also projected to decline this year, but this is all based on the current market conditions, right, guys? But revenue is supposed to go up 19% next year, and then 26% or something like that in 2027. So clearly there's a lot of growth to be had, and I don't even think it's going to be the full picture, because when these interest rates really do drop down precipitously, not just a little bit below 4%, I'm thinking 3-2%, these housing inventory companies, these companies in the housing market, the mortgage originators like Rocket Mortgage and stuff like that, UWM, all of those companies are going to stand to benefit there. So yeah, I do think at $1.62, there's a lot to not like about the company, but they're over that $1 per share thing, which is something I personally care very much about. You don't want to be a part of a company doing reverse split. Outstanding shares is not too bad, about 700 million. Market capitalization about 1.5 billion. And with a hot housing market, I do think there's a lot of upside to be had there. I think at least $10 a share, probably 20, and stuff like that. Yes, they've been losing money throughout 2022, 3 and 4, but at least it's gone down. The losses have gone down, but the revenue has drifted down as well because of that. So that's kind of what the playbook is when you have tough market conditions. And the housing stocks have not had that crazy boom that other markets like tech and energy and all that stuff has had, because interest rates are still too high. I think the cutoff for that stuff is like, once you get below 4%, then the mortgage market starts to really get going, guys. So that's kind of what I see, and I do think it's worthy of a buy for now, and this is not financial advice. Make sure you like, comment, subscribe, favorite, put on the notification bell. Please turn off the ad block, guys. Sign up for Robinhood using my link, or check out my Amazon link for something cool related to this review, and I get a commission. So I would appreciate it. Thank you, and bye.